Good afternoon, everybody. Welcome to TraderMerlin Show, where Mesnok is asking, what color am I today? I'm back to my horrible camera, for some reason, here's the camera that I got, everybody. This is the Canon A3100, which cost me a good pretty penny, but I just can't seem to get it dialed in yet. So my goal is to make it so I look pretty. I got to do something to make me look pretty. So this is the color I am today. At least I'm smiling and had a good day trading. So hopefully you guys are doing good as well. I'm going to start things off simply by going through our top 7 markets. There was some nice moves out there in today's market, so I wanted to just address those charts. And then I'll dive into a question that came in, which is dealing with kind of swing trading strategies, and I'll go through some of the considerations I think are really important. At a high level, I'll talk about some of the strategies that I've used over time and kind of explain which ones work best for me. And then I'll open up to a couple more questions, and then we'll probably wrap it up, hopefully under an hour show. I'm a little bit cooler. I actually have a fan running. I had to test audio levels today because there's a fan over here that you can't quite hear, although it's not on my face, it's on my legs to keep that mosquito away from me. But damn, that mosquito, I couldn't find that son of a... Anyway, I hate mosquitoes. Let's get things started just by talking the top 7 markets here. Working from the bottom to the top, we had crypto, still not out of the woods yet. We had fun in our CIL session the other day discussing what's going on in that crypto space. And while it looks positive, today's action isn't that great. We had this nice little sell-off today down to about 2.5% slide for Bitcoin today, which doesn't paint a real great picture, although I was kind of expecting that symmetrical triangle there, ascending triangle that you see forming on the right-hand side of the chart. I kind of expect that to break and follow that blue line up, going back up towards that 30,000 mark, but today, not happening. Down, as I mentioned, about 2.5% to 23,350 as we speak, making it your worst performer. Now, not shockingly, we had this Russell 2000, which came into supply yesterday and had an aggressive sell-off from it today, down about 1.54%. I did not go short on the Russell, unfortunately. 1992 is where we're at right now. My guess is we will probably come back down and retest this previous yellow box that we had just, 5 days ago. Would not surprise me to see a retest there, and then if the trend is in fact strong, continue and try to challenge those 2150 marks. So not a bad day for the Russell 2000, considering where it's come from. 1.5% doesn't seem like it's too bad. NASDAQ 1.11% slide, similar picture, although it was actually, in my opinion, a much more positive picture because it broke above this area of supply. Well, today, drifting back down, we'll probably come back down to this 13,285 mark where it was the origin of this last 3-day run that popped to the upside. Right now it's at 13,507, slide of 151 points for the NASDAQ today. Now, gold. A little bit of a slide. We've seen gold and silver take a pretty big dump over the last 4 trading sessions. You can see nothing but red for the past 3 days on the gold futures. 1776. Yes, the day we had our independence. Down 0.72% for gold. I guess the question for me anyway, because I do have gold, although mine's physical gold, is are we going to come back down to this 1769 mark, or do we actually end up closing this gap that formed over that weekend, getting us all the way down to 1718? So not a big fan of that open gap there, as I'm long gold and silver, but right now we'll have to wait and see if these levels that it's coming up to end up holding it to the upside. S&P 500 down 0.63%. Similar picture of the NASDAQ. It broke above that yellow box. I was feeling optimistic, and of course, as soon as it makes you feel optimistic, it rips the opposite direction. Now, this doesn't mean that this trend is over by any means. Just based off of typical nature of pullbacks and corrective phases, we should probably come back down to this 4,200 mark on the S&P before continuing that next leg up. Right now, you are down, as I mentioned, 0.64% on the S&P. 4,280 is where we're at now. Dow, which was our big winner yesterday, is the least loser, I guess, for the indexes, down 0.37%. Right now, just this small, it's almost kind of a Harami formation, but not quite. Still right near those highs, looking a bit better than the S&P and the NASDAQ for sure, but down 0.38% nonetheless. And let's go to crude oil, which was up 1% today. No, someone asked me if that was a Harami formation. It is not a Harami because the tails from the day are far too big, so it's technically not a Harami, although I would be fine trading it in a similar manner as I would Harami. But 1.02% is what we had for crude oil to the upside. Part of the other pieces that were moving out there, or not moving really, was this dollar index. Remember we talked about that dollar index having a shooting star formation right near that top of that yellow box. That was yesterday's close. Kind of waiting for it to break below today's lows. Well, we didn't. So in my book, this is a question that came in a couple times from you guys over the past week. When I talked about the shooting star formation on the pattern last Thursday, a lot of you are asking, well, how long does that stay in play? Is it negated? Well, let me real quickly bring up that NASDAQ one. So here's the shooting star right there on the hard red edge of your charts, right? That's the last candle you see on the right there. So that was the shooting star formation. Waiting for it to break below 13,285 on the NASDAQ would have been your trigger, but it just ripped up all day the next day. Okay, fine. You would not have made the trade. In my book, if it breaks the high of the shooting star, then it's out. It's no longer valid. If it goes up for a couple days and doesn't break the high, then I'm okay still trading the shooting star formation. Well, notice what we did here. We've now broken up. So to me, this shooting star we had on the 11th of August is null and void. I wouldn't pay attention to it. It actually becomes an origin for a potential pullback, right? Coming back down to it because that was your rally, base rally out. And I think you'll probably see this drop to 13,285. Now, if we look at, heck else was I talking? Oh, we were looking at that dollar index. You know, you have that shooting star formation right here, but it still didn't break today's lows. Yesterday's low on this bad boy was 106.318. Today it was 106.310. So I guess technically we did barely break it by 2/100ths or 8/100ths of a penny. Doesn't really constitute me breaking down below that. But in my mind, this still is in play, the bottom of that shooting star. So if we get a low close below 106, let's say 30, then I think you have a potential to get back down towards this 105 level. And that may not seem like much, but a dollar move that far using leverage can be significant, and also the impact it's going to have on the equity markets. Bonds is the last piece I want to look at for today. I should probably move my bond section up because I always have to scroll down. You had a pretty boring flat day. I'm just kidding. That's totally sarcastic. As it rolled over now, we don't get to see it. So let's just give you the percentage that it rolled over from. We had a gain intraday of about 2.04 on the 10-year, which is not great for the housing market, but given where we're at, we're still trending down from those peaks we saw back in June. And that, my friends, is your start of the day. UK 10% inflation making the dollar pop. Well, let's look at some of that. You talk about the inflation numbers. Let me start things off here with your economic calendar, earnings calendar, excuse me. Cisco Systems barely beat earnings. Target just missed horribly and only down 2.69%. They were supposed to make 71 cents per share. They came out at 39 cents per share. So yesterday, remember, you had Walmart a few weeks back, lowered their forecast and beat it. So all of a sudden, Walmart takes off. Gotta love that manipulation. And then you have Target today reporting earnings and missing badly and down 2.69%. One thing of note for those of you who are watching Walmart, you see the pattern that formed today on Walmart? Look at that shooting star. All right, you get a gigantic unfilled gap. You got a huge shooting star. Might want to keep an eye on this over the next few days. I definitely think Walmart has the potential to start to close this gap, especially when I show you the retail sales numbers that just came in. They did not look good. Is the shooting star is in the range? It is. And we talked about that on yesterday's show, where ideally you want a shooting star to be at the top of a really aggressive uptrend. Now, you can still trade it if it's in a range-bound market. There just better be enough meat on the bone for you to take that trade. And in this case, on the dollar index, I believe there was. So let me just really bring that one up here. You know, if I'm going short down below this line here, well, my stop loss is obviously above. So I'm going short, let's say below 10. Let me get the exact number here. 106.30, and my stop out's going to be about 107.10. So I've got a 70-cent stop loss. It means I got to be making 210. Target down here at 104.70. Basically a 3-to-1 reward to risk ratio. So that should work, or be very close to being almost a 3-to-1 reward to risk ratio there. So you're right. I would prefer this to be at the peak of an uptrend, but right now it's just range bound, so it's not as strong as normal, but we can still trade them the same way. All right. Target is cutting prices for consumers. They are opening Ultas in most New Jersey stores. All right, you can tell I spend a lot of time in Ulta. Got to get all that. It's all that Botox I've been getting, and I have to keep up with the Southern Californians. I'm actually getting a butt job and a boob job next month, so it should be really interesting. We'll do a topless show for everybody just to have some entertainment. I'm just kidding. Where am I going with the show today? All right, let's go back over to our earnings calendar. You had Lowe's Company reporting earnings as well. They beat just barely. TJ Maxx, Ross Stores is going to come up next, but TJ Maxx reporting earnings today. They beat, and they were about 2.8%. So some retailers doing good, and then there's Target. On the economic calendar, this is going back to the comment about inflation. And yeah, it is fairly high out there, Chase. Notice the British pound up at the top. CPI numbers were expected to rise from 9.4% to 9.8%. Just a slight increase, right? So while the US's are dropping significantly, you see the UK come out at a much higher number. They came out at 10.1. Ouch. Not a great inflation number. They want to see that start to slow down, but they have been, I guess, a little bit behind us with regards to raising rates, and that may cause them to be more aggressive. Now, as Chase says, UK inflation, 10%, making the dollar more attractive. Well, it depends. Not necessarily making it more attractive. Remember, the higher those rates go, higher inflation goes, the more likely people will be buying, or they'll be raising rates. Therefore, their currency will become more attractive the more that they start to raise their rates, because you get the carry trade aspect to it. Yeah, I'm not getting Botox. Don't worry. No Botox here. So economic data wise, not looking so good for the UK. You look at their PPI output. So the cost for the basket of goods and services was declining, but the cost that they were charging was surging. So this may actually be good for some of the businesses reporting earnings over there, the discrepancy between input and output on PPI numbers, but not at all good news for the UK from an inflationary perspective. Now for the US, you can see another unbelievable miss on crude oil inventories, just colossal miss. But the biggest number for me for the day for the US was retail sales. Now we had Walmart lower their forecast significantly. They beat earnings, and yay, Walmart's great again. Well, look at the retail sales numbers. They were expecting 0.1%. Now the previous month-over-month reading was 0.8%. So 0.8%, and now they expect it to be 0.1%. Came out at 0, which means that retail sales are not increasing at all. They stayed right where that. That's not a good sign for the economy going forward. Again, you want consumption. We're talking back to school stuff going on right now, right? I got to scroll through Facebook and Instagram, watch every person I went to school with go, here's my kid at the first day of high school. Here, their junior year, their sophomore year. Yeah, keep it to yourself. They're spending all kinds of money on backpacks and clothing and pencils. Let's see these retail sales numbers. Expected them to be a little bit better than that, right? A little bit of a pop there, but we did not get that, unfortunately. So I thought that this is a pretty bad piece of news. Now, we have some good announcements coming out tomorrow, which I will get at the end of the show, but all in all, some pretty big announcements, especially for Australia. They got unemployment rate number coming out later on this evening, and their currency has taken a pretty big slide over the last 2. Here's the Australian dollar, so you guys can see a pretty sharp slide over the last 3 trading sessions for the Aussie dollar. Here's the British pound, since we just brought that one up and talked about it. Your GBP is selling off, which means that the USD is performing rather well. Here's USD against the Japanese yen, which is starting to surge back up. I've been really bullish on this USD JPY pair, and then all of a sudden we had this pretty significant breakdown, but it feels like it's found its footing, stabilized, and now maybe we'll see this dollar start to move up to the upside. What else do I have? The Aussie dollar there. We already looked at that one. The euro, right? Euro still, over the past month, trending up slightly, but the bigger picture is that downtrend, which is, that's a large part of the topic for today when we talk about trading strategies. So there we go. Covered most of the major markets, covered your economic, your earnings counter information as well. Apple was awesome trying to fill the daily gap where they failed before. Man, Apple, and I agree with you, Chase, Apple is really what's propping this market up. I mean, you have just, it seems like nonstop, Apple just keeps bringing this market up, bring it up. And, if you are long on Apple, expect some difficulty as you approach this 180 mark. Now, we're still a ways away from that. We're only up $1.50 today. 174.55 is where it's at right now. But, my eyes are automatically drawn to this massive gap down here at 157. At some point, I'm waiting for a little bit of weakness in Apple, and then I'll be looking to charge and close that gap. There's actually 2 unfilled gaps here that I'd be interested in with Apple. But, yeah, it's been absolutely pulling this market to the upside. I think I mentioned this one yesterday. If you look at the percentage gain from those lows, 35% just since June 16th. So in 2 months, here we are up 35% on Apple. And since it's such a heavy weighting on the NASDAQ and S&P, it's no wonder these markets are surging. Well, a lot of other companies are not surging as much as Apple. So it's a very biased market that we have, one that is way overinflated or overweighted, in my opinion, in just a handful of stocks. Unfortunately, I don't make the indexes. All right, let me real quickly go through this one because I want to spend a little bit of time kind of addressing styles. We're going to talk about swing trading strategies. Now, I'm not going to go into specific, here's how you'll do this strategy and this strategy and this strategy. Bottom line is you should always have a strategy regardless of what style you are trying to trade. This all comes from Michael. So Michael, hopefully you're here today. He says, what are some good swing trading ideas and strategies for folks who cannot monitor hourly price movements due to work? I enjoy tracking the markets, but as a frontline healthcare worker, I am unable to check the triple Qs from shortly after open until very near close. So I miss out on all the intraday price action. My goal would be to generate some free cash flow, but I don't think that day trading is a realistic option for me. Any ideas? Yeah, absolutely. I will start off by saying this. I think that most people would be better served, if as you're starting out as a trader, most people would be better served starting out as a swing or a position trader. Start with the big picture because things move slower. And what I mean by that is you're not stuck with all these, the minutia of the markets, all these minor little changes that happen every single day, up, down, up, down, up, down, down. It'll drive you crazy. And especially if you're a frontline healthcare worker, I would definitely ask that you don't day trade, because I could just see you, Michael. I don't know, let's say you're a surgeon. I could see you're a surgeon, you know, and you got an open heart surgeon. Your stock quotes are popping up on your iWatch. Like, oh no, I'm gonna make a trade real quick. Please focus on your job. But there are a lot of really easy things that you can do to facilitate and make it easier for you to be a swing trader. So let me walk through what some of those pieces are. I'm going to start off with my considerations. When I say considerations, I'm really looking for kind of the high-level pieces that you have to address as a swing trader. Number one for me is going to be very, very simple. It's just your trading timeframes, right? If you are a swing trader, I'll be honest, you really have no reason to be looking at a 5-minute chart, a 1-minute chart, 3-minute chart. Like, honestly, the smallest I think you should ever look at as a swing trader would be something like a 15-minute time frame. And it's just because you start off on the bigger time frames like your weekly and monthlies. Now, monthly, to me, that's long-term investor stuff. If you want to be swing, I would say maybe start with the weekly, certainly the daily, and then get down to, let's say, the 4-hour, and maybe do your executions on the hourly time frame. What some people like to do is jump all the way down and make their execution on like a 5-minute. I just don't think you need to have that kind of focus. Once you map out your trade, and we'll talk about that in a second, you can automate a lot of this to alert you to specific market conditions, or you could actually have the computer execute trades for you once those conditions are met. So trading timeframes for me is probably your major consideration. If you are a swing trader and you find yourself looking at, 5 minutes, even 15s are probably too little, then stop. You're going to become obsessed with looking at those charts. Look at them on the bigger time frame, and you'll be much better off. As Delia says, 4 hours awesome. Yeah. A lot of people love that 4-hour time frame. I'm a fan of it as well. I've mentioned this before. I trade all styles actually, I'm not really a long-term investor in equities. In crypto I am, but I would say I'm a swing trader and I'm a short-term day trader. And I still look at the daily, the 4-hour, the 60, the 15, and the 5. Those are my time frames that I look at. And when I'm looking at those, I'm looking at the market and the individual security that I might be in as it relates to that market. So, Glenn likes the 1 hour and the 30 minutes. Okay, but what you do now, when you start getting smaller and smaller like that, you really start to, at least what I found in my experience, not only as a trader but also as kind of a mentor and an educator, is when you start looking at those smaller time frames, your brain all of a sudden starts to make smaller trades. So stay at those bigger time frames, think bigger picture, and that, if you've mapped out, let's say, a nice big uptrend on the daily time frame, and your 30-minute says, okay, it's selling off into a demand zone, that's great. But if you go long in that demand zone, no longer use that 30-minute time frame. It's now stepping back, saying, I got my ideal entry using the smaller time frame. Let's look at the bigger picture so I stay in this thing and capture that whole big move that I was looking for initially. Sometimes you'll make that trade thinking it's a pullback on the 30 into a demand zone, and then all of a sudden you're like, well, maybe I'll just look at it in the 15, and next thing you know, you get jigged out of the position. It'll drive you absolutely bonkers. So stick with those higher time frames. Next consideration for me anyway, bracket orders. So for somebody like Michael and others who cannot sit in front of the computer, or more importantly, do not want to sit in front of a computer, I think that might be actually the bigger way to look at it. You need to be using things like bracket orders and OCO orders or one sends other orders. Those are very important order mechanisms that will allow you to keep your hands free. Now, you guys may know Michael Young. He's one of the Chicago floor traders who I hold in the highest regard, just an extremely upstanding guy, great trader, and just an awesome human being. There should be more people like him. We were giving a presentation in Minnesota many years ago. And it was funny because, we sat down in the hotel lobby the night before and had a little cocktail in the bar, and we're just talking about it. And he's like, oh, man, I got to go. I was like, oh, all right, well, it's only like 8 o'clock, And he's like, I got to go put some trades on. I was like, oh, okay. And, his strategy was he would go and he would do his analysis. He'd look for the setup, whatever setup he was looking for, and when he find that one, he would put a bracket order on it. For those who may not know, a bracket order is where you completely map out and put in all of the different variables of your trade. So, for example, I'll draw the picture out here. Let's say I've got price has been trending up. So here I got price trending up, and then it's pulling back. And I've already mapped out that there's a demand zone. I'm just making this up, guys. There's a demand zone. I'll call this DMAND. And, it peaked out here. So here's your target. I'm keeping this very simple, TARGET. So what Michael did is he's like, okay, he went back to his room and he said, if it gets down below this level right here, that's my entry. So entry is that level. My stop, ENTRY. And basically he had his entry, his stop, and his price target. He put in all three of those numbers. One number there, two number there, three numbers there. And what did he do? Just went to sleep. He knows that there's maximum loss in this because it was a 24-hour market and the things he was trading were the major indexes. So it wasn't like it's super illiquid. But his maximum loss is this distance right here. The distance between your entry and your stop. That's it. And if he was okay, let's say that was, $500. Maximum loss, great. And maybe his profit target was 2,000. Well, awesome. If you've done the analysis and all things pan out for you, and in the worst cases, you're going to have a $500 stop loss. Best case scenario, he hit you 2,000. And I believe that next morning was like 12 or 1,500 bucks because we met for breakfast and he comes down and he had this nice smile on his face. I'm like, how you doing? He goes, good. That trade I put on last night was up, I think, 12 or 1,500 bucks. I'm like, great. Let's talk about that in our presentation because, we were talking to prospective students from Online Trading Academy and it was like, this is one of those things that I think people need to do is understand that I can just put orders in the system and as long as I'm okay with that risk, then I can just leave it alone and let it do its thing. So what do we do? Well, not a lot of platforms give you OCOs, OSOs. Thinkorswim does. Here's TradeStation just as an example. But let's say, let's pick a stock like, I'm just making this one up here, Microsoft, okay? So now let me see something that might actually be good. Bear with me as I try to find something that at least has somewhat of an interesting trade for me. No. Okay, so let's go back to Apple since we're coming into the all-time highs. All right, so here's your Apple chart. And I'll keep this as a pretty rough go here, but let's say I'm eyeballing this level up here as my supply zone. Now it's a huge zone that I've mapped out there. It's like $4.50. $5.50. That's okay. So if I have this as my area where I'm entering at 174.55, and where might my target be? Well, you've got a gap right there that could fill at 165. You also have an unfilled gap that goes all the way down here, which is going to be 157. So let's say we map out our trade like this. What I can do is I can put in, is there a way to set it up for a time frame? I set up in the middle of the night but got stopped out in the first 15 minutes of the open. Would like my trade to be placed at 9. On some platforms there are. I haven't done that on here. Let me just go here and we'll just do a OCO order. And I'll do one entry. That's a breakout. We'll do a long single order with one entry and one stop. So there might be activation rules that you can specify time. Well, I'm not 100% sure on TradeStation because I've never done time activation. But you can see, well, you probably can't because it's so small and I can't increase the font. I apologize, but nothing I can do about the size of the font here. Basically, what I have now is, with the bracket order, I've got the order that says, if it gets to a specific price, and our price was 174.55. So I go 174.55. This is a sell short, right? So if it gets to 174.55, sell short, and let's just say 100 shares. So there you have it, 100 shares. Now, it's also going to have a profit target and a stop loss. So you have to make sure you have the right wordings to here. So I'm going to go buy to cover. We'll change that to 100 shares. And basically, we're just putting in our variables. So the buy to cover, in this case, our target is, what do we say, 157. So I'll go limit, and we'll put in a price of 157. All right, so I got that number in there. And then our stop order, would be if it rallies up against us and gets to 179.92. So we'll call it 180. We'll do a hair over 180. So we'll go 180.10. All right, so now I've got everything set up, and if I submit this order, it's just going to wait until those conditions are met. Actually, it would fill me immediately because the current price is 174.55 if the markets were open. So, Michael, in your question there, I don't know. Let me see if I can go here. Activation rule. Yeah, it's not even let me do an activation rule here, so I'm not exactly sure why that is. But I don't know in TradeStation if you can. I've never done it with a time perimeter. What you could do is you could queue them all up. So you notice here you've got stage order. So you could stage the order at the bottom. And then when you're ready, when you go to work, just at 9:30, just hit that button and let it go. You can place rules on time if you click advanced order. Yeah, I thought I had that, Austin. Oh, it wasn't activation. It was just advanced. I say, yeah, it's interesting. It should actually be up there. Or it should be up right up here. So I'll go stage order. For some reason, I'm not getting... It's not letting me click on the advanced price. I'm not sure why. But normally you would be able to get those different settings there. And I don't see a time setting, but you might be able to. So thanks, Austin. Yeah, I don't know where that setting is because I've never used it, but it most likely is going to be in this advanced piece here, which should have been on the major OCO entry. So that's the other consideration, is making sure that you have bracket orders, OCOs, because it's, in my opinion, for those that don't want to sit in front of a screen, it's a lifesaver. It will prevent you from sitting there staring at your screen, doing all kinds of wasting time and stressing out over markets that you just don't need to be focusing on. So that's your second one. Number 3 is going to be what's your stop loss management. I saw someone early on mention turtle traders. I think that was Delia. There's a great book out there called The Way of the Turtles. You can just go to Google and type in wayoftheturtles.pdf and download that book and read it. Really, the turtles were predominantly a trend following system. However, one of the good things about trend following is, well, let me just say, trend following is great, but you got to have that stop loss management in place. As I mentioned in this program many times, it's not about the number of trades you make, in my opinion. It's really about the quality of trades you make. And the goal for all of us, whether I'm trading on a 1-minute time frame or a monthly time frame, is to find those trades where all of a sudden I get into a runner, right? And I'm sure I've got my 3-to-1 target set up, but what I'd ultimately like to have is a 10-to-1, a 30-to-1, a 50-to-1, a 100-to-1. Hell, if you're in Bitcoin, a 10,000-to-1 rate of return on your investment. And the only way you can do that is by managing your downside. Move those stop losses up. And we talked about that on yesterday's show. Like, how do you do that? Well, you could be using automated trailing stops. Those are built into most software platforms out there. You can use manual stops where you actually adjust it every day. Common strategy is just to put it underneath the low of the previous day. That's an easy one. But you've always got to be moving your stop losses up, locking in profit, and never giving it back. So if you move your stop loss from, let's say, $100, and now you move it up to $110, don't drop your stop loss back to 105. It should only be moved up if you're long, and it should only be moved down if you're short. Never change that one. All right, what else do I have? My last piece here, 3. And then the other one would be automation and alerts. So for Michael and others that may not have a lot of time to sit in front of the computers and execute trades, I use alerts a lot. And just about every single platform has some form of alerts. I'll go back to TradingView here. You can generally put in a line. So let's say, for example, I want to know, let's see, which one do I, let's go to Russell. Let's go to IWM, right? So here's the Russell 2000, and I want to know if it breaks below the low from 4 days ago, which to me is an important one. That's right here. And that's that dotted blue line. I want to know if it closes below that. If it doesn't, I don't care. I think it's still an uptrend. Fine. But you could double click on these things. No, it's not in there. There's an alert button. Add alert. Right, so I could add alert to that horizontal line. I just clicked the little alert button on the top. You can have it email you. You can have it pop up. It's kind of cool. On some platforms, you can have them text you. So here's an email to SMS. It'll text you on that one that it's crossing over a specific number. To me, this is great because it keeps you hands off. You don't have to look at it. It'll just pop up an alert saying, hey, IWM has crossed below that 187 mark, or sorry, that 196.04 mark that you outlined. This saves you a ton of effort, and a lot of what I do is mapping out trades beforehand and drawing out my entry, stop loss, price targets, and have all the numbers. But sometimes I don't put them all in the system. I want to make sure when I make that trade that I can evaluate what's going on at that moment. So I don't always do overnight OCO bracket orders. I like to do it when I see it, market's open, things look good, I'll put that trade on, and then I'll just turn it off and go away and do something else. Let's see. Can you place rules on time if you click advance? Okay, we already went over Austin's question. So that is probably one of my favorite features on just about every platform is the alerts. Now, you notice I put automation in here. Personally, I'm not a fan of automation. I don't like it. I like to do my trades manually. It's kind of like I prefer to have a car where I'm actually driving it versus autonomous, although I'm sure there are situations where I would love to have a driverless car, like when I'm going to Vegas and partying all the way up there. But we're not quite there yet. So on some platforms, you can use their built-in strategies. They have some automation. TradeStation had a really cool strategy builder where you could backtest a strategy and implement it and then just basically let the computer trade for you. Personally, not for me, but for some of you that might be something to test the waters as well. There are also companies that you can go to, you subscribe to their services and they trade for you. I'm going to say just don't do that. I have not seen success with those types of services where someone's got an amazing strategy with all these great statistics and like, oh yeah, just give us 20 grand and we'll trade it for you. Both times I lost every single penny in those accounts. So not working for me, and those are tried and tested, proven ones. So those are my considerations to start with. The next piece is, what are those strategies? So I'm going to run through all the ones that I have done in the past, and I'll rank them by order of importance and magnitude for my trading career over time. Really simple. Number one, you all know what's going to be supply and demand. It's just the simplest, easiest thing to see on your price charts is to go out to any security, here's Aussie USD, and just look for areas of supply and demand. Now, if you aren't familiar with supply and demand methodology, etc., I work with Online Trading Academy. They teach supply and demand. There's other people out there that teach it. But bottom line is, it's the driver of price in just about every single thing in life, whether I'm buying cans of Coca-Cola, new homes or cars, even baseball cards. It's all driven by supply and demand. So understanding price relationship, supply and demand, and how these charts reflect big buyers and big sellers, to me, is the ultimate trading strategy for swing trading. Now, if we tie this back together with what I mentioned, which was, okay, supply and demand is great and all, well, I'm going to be looking at dailies and weekly charts for this. If I'm a day trader, I'm still using supply and demand, but I'm using 15s and 5s, maybe hourly charts, right? Next piece, trend riding. This is huge. I am a big fan. As you guys know, I think Sam Seiden's a complete idiot and a scumbag, and I just dislike him with all my heart. He's also one of those guys who says that the trend is not important. He says trend and volume are not important. Those are what he said on the Power Trading radio show years ago. And it's like, are you an idiot? Volume is critical in understanding what people are buying and how they're buying it. Number two, trend is so critical. It's like saying, oh, the direction of a landslide is not important to me. I don't care. It's fine. It means everything. You know what's going to get wiped out. You know where the momentum is going. And are you going to try to run up that hill as the landslide is coming down? Or are you going to just grab an inner tube and go with it? You go with it because that's the point of least resistance. It's really easy for us to go with the trend. Now, Bob Dunn's another one who he's a ride the wave guy. That's his whole strategy. Ride the wave. A trend follower. Bravo. That's what you should be doing. Now, I don't get... Oh, yeah, Simon, I know. I don't get... it's because he works for Sam now. So that's why. Sam Evans works for Sam Seiden, unfortunately. I still think highly of Sam Evans, except the choice for him to go work with Sam Seiden, which I just do not understand. I don't say anybody could want to work for that guy. So for those of you that don't incorporate some trend trading strategy or some trading technique into your swing trading, you must. Your odds are better by going with whatever that trend is currently giving you. And you've heard me talk about this many times. So I'll just use Bitcoin as an example right now. I know some of you just hate Bitcoin, but I talked about this in my Crypto Investor Live program last night. It's like, well, what's the direction here? What should we be doing? Well, and for all intents and purposes, we should be thinking about just shorting Bitcoin. Why? Because the trend is clearly down since November and aggressively down. And until that trend is broken, I have no reason to think that it's going to, rip to the upside. Now we're getting to a point that's getting close, but in this example, you should be staying to the short side. Even though, if I look smaller time frame, it looks like it's starting to get rather positive, right? It's starting to creep up here, starting to see some higher lows. Today, not really good for my analysis on this one, but it does look like it's gaining some strength. So for those of you who are short-term swing traders for the next couple days or weeks, you might want to look at price drifting up towards this downtrending line. But the bigger picture is telling us I should be shorting these rallies into supply, just because that's where the big picture is. Now, that's crypto. Let's go look at commodity. I'm just going to click on the first one that I can see. Let's go platinum. Same thing here. Platinum has been in this really nice downtrend. It actually looks like it went past and hit this little area of supply right here and ripped down from that level. And I would expect that because it's been in this downtrend for the better part of 6-8 months. Right? That trend is down. Go with that one. So to me, trend riding, this is where you're going to get the bigger trades. Do you think I'm going to get a bigger trade going long platinum right now or short platinum? And in my opinion, it would be short platinum because I'm looking at what happened the last time it peaks, aggressive sell-off. Peaks, aggressive sell-off. Well, had a sharp rally, peaked. Now I feel like you're going to start to see that aggressive sell-off here for platinum. And this is independent of my opinions about whatever it is, whatever that security is, right? If I look at platinum or palladium or silver, gold, corn, wheat, soybeans, it doesn't matter to me. It's all what the price chart is telling us. Now, that's where we get ourselves into trouble as we start to go, I just know what's going on with this stock. I've been looking at all the information and it's going to go up. Okay, well, now you start to hurt yourself because the chart on the short-term time frame saying it's trending down. When I say short-term, I'm talking just the last few days. Intermediate, you could argue it's been up since July, but the bigger picture is down. So go with that one. To me, trend riding is once you get supply and demand down, riding trends is probably the most important piece, not only to consistency, but also to getting those really big winners, right? Looking for, your 50, 100 to 1 winning trades. That's the trend riding. And, this is where I love Bob Dunn's style. He's a little militant about it. He seems to think it's the only way, but I think that if you are even a short-term trader, looking for the trend is key. So follow that trend. As you guys know, the trend is your friend until the bend at the end. Volume will make or break a trade. Trend will sometimes get you in late, but more guaranteed. Yeah, Feast, it's tricky because volume to me represents emotions, right? And a lot of times what I'm looking for is panic. I know this sounds horrible. For those of you who know me personally, I'm not a miserable person that wishes bad on anybody except one person. Not a wish bad on him. I just hope karma comes back and bites him in the butt. But I'm the type of person. I did it the other day. Some guys broke down the side of the road, and I just stopped in the middle of traffic and picked them up and gave them a ride to the gas station and fixed the car. I'm going to try to help people out. However, when you're in the trading world, when you're in stocks, futures, options, or anything like that, it is pure combat. So while I love giving you guys information, and I'm being as truthful as I can possibly be with every single thing that I do with you guys, if you're on the opposite side of my trade, I'm hoping to rip your throat out. I'm hoping that you lose. I'm doing everything in my power to make sure that you lose. Whoever I sold my shares to, you're going down. And sorry, that's the nature of the beast. I have no love or emotions or anything when I'm trading. It is brutal war, and you have to treat it that way. You can't be like, oh man, that guy that I just sold to is losing a ton of money. Screw that. They bought it for a reason. That's their problem. They can deal with it. I'm looking for fear. I'm looking for panic. I love it in the financial markets where you can see people screaming in agony. Where's that? Well, let's just go look at, which I did. I sold puts today on Bed Bath & Beyond, and I know we had a question about this one, so I will show you. This right here, you can tell by this spike that there is absolute pain here. People are just panicking. Well, look at the volume. Let me add volume onto this chart. Look at the volume. If you go back here into May, Bed Bath & Beyond was trading, let's say, 5 million shares a day, which honestly is pretty damn good. Well, on August 16th, it traded 395 million. That is absolute panic. That is chaos. That's lemmings flying off the cliff, not even knowing why. They're just losing their freaking minds. I love that type of stuff. When I see climactic volume on a normal chart, this chart here, by the way, guys, is not a normal chart. This is a pump and dump. This is absolute joke stock right now, a meme stock at this point, which will come crashing down. I assure you, Bed Bath & Beyond has not done a big turnaround. This isn't the resurgence of Bed Bath & Beyond. It's just a prolonged death. Basically, someone gave them a shot of a heroin and a what do they call those, shock defibrillator, and pop them back up, but they're going to come crashing back down here. Anyway, I'll tell you about my puts here in just a little bit. So, I love when I see stuff like this, especially if I can line it up with this climactic volume, which to me is fear or greed, right? It's both. Could be fear, could be greed. In this case, I would say it's greed because of the way it's ripping up. And this big volume spike we saw yesterday, in my opinion, is just people who have no idea, following the herd because they saw this on some top 10 list, and now they're buying Bed Bath & Beyond thinking it's going to go up to $100, and they're going to lose everything. So I love this. I love going counter. I sold puts today, so it's kind of risky for me to be selling puts because I'm committing myself to buy, but I also am getting over 2%, expecting there to be less than a 50% decline in Bed Bath & Beyond. And we'll talk more about that later on. So I think volume is key. You combine that with trends. You combine that with supply and demand. Awesome, right? That's really, for me, a great piece. It will clue you into potential turning points. Markets tend to turn when you have the highest spikes of volume. I mean, you could go back to this one right here, where my cursor is. A huge spike of volume. It was the peak. This one, I think that the peak is probably in today. I mentioned on 2 days ago, I said if this thing gets up to 30, it'd probably be a good short. Problem is the implied volatility and cost for these were so ridiculous on Bed Bath & Beyond. The premiums were off the charts for it, so I decided not to buy. Instead, I sold and collected that premium. So volume is key for me. Next, I got them out. I like hunting extremes. Now, this is a strategy that is hit or miss. What I mean by hunting extremes is I'm looking for something that's had such a colossal sell-off or an unbelievable run-up that it's just got to go the opposite direction. I'm looking for something that is so oversold, and I could be using things like stochastics or Bollinger Bands or RSI, even MACD, CCI, ADX, to gauge how extreme those are. And if I find the right levels, if I find the right setup, then I could be using that as a swing trading tactic. Now, there's a bit more to look for. I'll go over here and show you through my platform. I run filters and scans on the S&P for a lot of that stuff. So let's say, for example, I've sorted here by Bollinger Bands. So right now, PRGO, is 26% below its lower Bollinger Band. This is an extreme. As a matter of fact, this is actually a great setup if I was watching today. If I was watching this today, one second here. If I was watching this chart today, it's so used to using different platforms, this one screwed me up, right? If I was looking at this chart right here, I'd be eyeballing this and say, you know what? It looks like I've got a demand zone that runs back to here, which is, for those who might be listening to the podcast, you're looking at basically $37.50 to call it $36. That's your demand zone. Now, notice what happened here today. It came screaming into that. Huge climactic volume, way oversold, most likely earnings driven, right? And let's look at volume. I already have the volume on there. So, this is a good example of what I was just talking about. This is an absolute extreme. I could put Bollinger, stochastics, RSI, whatever you want. They're all going to say it was oversold at some point today, right? Even if I went into, let's say, a 15-minute time frame. It's been so long since I've used the charting on this one. PRGO, let me get that, and we'll just make this 15. Why are you not changing my time frame? Okay, I'll go the old-fashioned way. I'll go to a 15-minute time frame. Right, so at some point on this opening hour, everything was oversold. So I have a massively oversold security into an area of demand zone on climactic volume, and notice the spike intraday was its turning point. So this is the type of stuff, I love hunting this, although I will tell you it's actually very dangerous because there's a reason that PRGO sold off like it did today. Now this works for the upside as well. So here's TJ Maxx. Right, TJ Maxx up. It's 116% right now above its Bollinger Band. So it's 16% above its upper Bollinger Band. What I would do is look and see, is this coming into an area of supply? Well, unfortunately, it's not right now. Otherwise, I would, if it was coming into, let's say, the 72.50 mark, I'd be interested because that's a decent area of supply for me. Per monthly expirations end, very wide bid and ask. Right, Lori. And And that's the other thing. You know, one of the main criteria that I filter for is volume, just to make sure that, let's see if I go over here. I think I took the volume off as a column. But generally, I filter by volume. So if you look at the daily for PRGO, you can tell it's going to be thinly traded by the average daily volume. 1.3 million per day. You're going to have shoddy options, very thin, wide spreads, right? So you're not going to get a lot. Generally, it's the stuff that has big volume, and TJ Maxx is going to be better because it averages about 5.8. So you will certainly get better options on TJ Maxx, but it doesn't have a great setup out here. What about Agilent? Agilent, 1.5 million average, not that great. But anyway, I run these scans and filters all the time, and I'm just looking for things that are complete outliers. And if I find them, I'll be making trades off it. This is also one of the filters I use, as I mentioned to you guys, looking for hammers and shooting stars. You know, you have a hammer formation today on IPGP, which I would not trade because of the volume. It averages 500,000 shares a day, but it did have a hammer formation. Now this one's a lot better. Here's Lamb Research with a hammer formation, although it's not really at the bottom of a downtrend. So I'm always looking for different things, and any of these patterns may lead to a potential trade. Let's see if we have any shooting stars, Foreman. Nope, no shooting stars today. Anyway, scans and filters can help you out a lot there. You can also go to FinViz, has a lot of different, I guess, parameters you can look for. You know, I mentioned hunting extremes. I love it. And again, I'm looking for pain in the markets. I'm looking for that point that the retail investor threw in the towel and said, I'm done. I don't want to trade this anymore. Screw it. I'm over it. Forget it. The other one that I've used a bit in my past, I don't really use it anymore, is trading off of crossovers. Now, Brendan, who's one of our regulars here, he was talking about, you know, using moving average crossovers. And you can use a lot of different combinations, but generally what you're doing is you're expecting the shorter one to cross over the longer term time frame and then make trades accordingly. I personally think they're all very lagging. You're going to have to wait, you know, 3-4 candles before it finally confirms that they're crossing. So I stopped using moving average crossovers many years ago. However, I will say that a great tool, if you look at that list, I said supply and demand is one of your primary strategies. Number 2 would be trend riding and making sure that you're going with the trend. If you've got the trend mapped out on the price chart by looking at what's going on with price action, you could add on a moving average. You know, maybe you put on a 20-period moving average, and that can keep you in that trade longer. A lot of people will use a 20-period moving average as almost like a moving stop loss. So Apple, you know, is a good example here. Let me actually get out of TradeStation since I'm not really a TradeStation fan anymore. Let's go to Apple here. You know, it's hard to not identify this uptrend. Sometimes it blows my mind that people can't see the uptrends here, but that's an incredible one. And let's put a moving average on here. That's a 200, which I would never use as a swing trader. So let's go and do something smaller. You know, a 20-period moving average is going to be much shorter. This is a simple moving average, right? But notice, if I'm in this thing right now, if I'm in this long, I could certainly be looking for demand zones for price to come back down to. But, you know, my ultimate line in the sand could be, hey, if it closes below this 20-period moving average, I'm out. And what's nice about it is this, you notice, it has not closed below this moving average in a long time. It's giving you quite a buffer, right? For it to break down below this moving average, you'd have to fall from 174.55, which is what it's trading at right now, and get below 164. Now, that's a $10 cushion that you're giving price, which may be too much for you. But, you know, you kind of have to figure out what works for you. I think this is a great strategy for people using swing trades to just stay in trades longer. And what you could do is you could set an alert and, you know, let's say you're long. You're long on this one. You can just click on the line, click on the, where'd my alert thing go? Add alert. And basically says, if price crosses 20-period moving average, email me. All right, so go about your business, do whatever you got to do, and if over the course of the next month, year, whatever, price crosses below that 20-period moving average, you'll get a text message. You can go evaluate it, close your position if you choose to. So Delia's saying 20-period and 50-period, 20-period EMA versus a 50-period simple moving average. Interesting. Most people don't combine time frames like that. They're generally going to do both EMAs or both SMAs. But, you know, you can obviously mix up whatever you want. Your goal with that 50-period moving average is that it's longer term. So you want, I guess, the smoothness and consistency of it. In your 20 period, you like it to be more reactive. You're doing the exponential. Personally, a 20 crossing the 50 you are talking some major late to the party. Major, 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 major. I can't say it enough. Major, major late. So let's just do that. She's got the 20 period. I'll make this a 50 because you said a 50 period simple. I'll put the 50 period simple moving average on there, and then I'm going to add on a 20 period moving exponential. Let's see, moving average exponential. Oh, get out of here. It's not going to let me do it. I have too many indicators on. So let me close one of these out, I guess. We'll close this one, and hopefully it'll let me add another indicator. E for exponential. Okay. So here's my exponential. That's a 5. I'm going to put this on a 20 period exponential. And notice what this generally means is you're going to look for those crossovers. But the crossover basically told you to buy when it was up here at 149. Well, for me, the first buy signal was as it crossed this high, which is 143. So I'm saving you about $6. Now, nobody picked a dead bottom here. If you have to wait for the green after it hits 20-period moving average, yeah. Well, again, moving averages are lagging, regardless of which time frames you're using, because they have to use historical data. So all moving average crossovers, whether I'm using a 1 period and a 3, is still going to be lagging. Yeah, there's a 1330, there's the 8 and 80, Eric. A lot of people are using different moving averages. Personally, if I look at this list that I just gave you, oops, not that, that's Jerry Baldwin. When I look at this, I don't use moving average crossovers anymore. I look at the price chart and I can tell you pretty much what a moving average is doing, but I use supply and demand every day, trend trading every day, and then hunting extremes. I'm always looking for something in that vein. I'd love to find nice extreme panic moments where it comes into an area of demand, etc. Way behind on the vid. By time activation has to be market order, not limit for TradeStation. Yeah, I mean, we could get into the order routing process for it, but I'm just basically saying that these strategies that people are using are lagging anyway, right? They're all going to be... what's the difference between simple and exponential? How much time do I got left? Oh, crap. I'm at the end. Let me draw it out for you. So... I'm just going to do it on this page right here so you guys can see it. So we'll do a SMA at the top and an EMA at the bottom. So let's say you've got 20 bars worth of, let's make it a 5-period moving average, right? 1, 2, 3, 4, 5. What a simple moving average says is all of these are equal weighted. So it's going to take all of those, add them up, and then just divide by 5. An exponential moving average says, okay, I've got the same 2, 3, 4, same 5 candles, but instead of having it even weighted, it puts more weight on the most recent candle. So this one has way more value, and this old one here has a lot less value. And then it doesn't divide by 5, but it's designed to say, hey, listen, I don't really care about this old candle that was 5 ones ago, and I want to go put more weight on the most recent one. So from my experience in my usage, exponential moving averages are much better for shorter term trading because they're alerting to what's happening more recently. If you're somebody who's a long-term swing trader, I would use simple moving averages. I know I'm going to get hate. Hear me out. Simple moving averages are what more people are looking at. Traders look at EMA, but the average person is looking at simple moving averages. And I think that these systems like, Wise Trade or the red light, green light garbage you see on TV, that's usually simple moving averages. So go with what most people are using so you can anticipate what most people are going to do. All right, I got to wrap this up. I didn't even get to one question. Man, I have... Michael, let me get to this question for you because I think that this is an important one for today. With Bed Bath & Beyond's implied volatility going up 200% today, would it still be worth it to buy puts? The answer is no. I would have had to pay $9 for one put at the $21 strike price, which means even if it fell all the way down to $12, I might still be a loser. So no, judging on that, it was not worth it for me to buy puts today. So instead, what I did on Bed Bath & Beyond is I actually sold, and it's a wild one, but I sold the 13s. Now, here's the 13s right here, this horizontal dotted line. Those are the 13s that I sold today. Now, if you look at where price finished today, let's just do a measurement here. From where it is now to that level, it would have to fall roughly 43%. Now, how much did I collect in premium? Well, I collected $2.50. So I'm no longer, my average price, if I do get executed, is no longer going to be $13. Oop, let me get off of the snap. It's going to be $10.50. So that's way down here. So realistically, it would have to fall all the way down 55% for me to start to lose money on this one. And that could very well happen, but what I've seen happen with these meme stocks is it's probably going to crash down to, let's say, 15, 16 bucks over the next week. Then it'll bounce up another little bit, and then it'll come crashing all the way back down, probably getting sub $10 like it should. But the premium on this today was ridiculously good. It was such good premium, kind of hard not to. You just have to be careful. Don't worry, I didn't go all in and just go nuts on this and you know, sell my entire portfolio. I just sold 3 of them, so I collected some premium out there. I actually got the September 16th options on that one at $250. But we'll wait and see what happens over the next month. That's how long I'll have them, and I'll probably sell them before then. Who knows? But anyway, I wanted to share that with you guys just because I mentioned that on yesterday's show, and I have a ton of questions I have to get to, but I have to get out of here before I do an hour show. Plus, I got to get ready for my class for tomorrow. We got more crypto stuff going on. So here's what's happening for tomorrow. It's going to be another big day for the U.S. I'm actually pretty excited because we've seen some interesting news with regards to housing data. Well, notice we have existing home sales mañana. All right, so there's existing home sales. They're expecting a sharp decline from 5.12 million to 4.87. My guess is it'll probably decline even more than that. You also have for Canada, there's IPPI and RMPI numbers, so watch out for those if you're trading the Canadian dollar. Up at the top, you've got CPI numbers coming out for Europe. Remember, Europe has been the last one of the major countries to actually start raising rates. They just raised 50 basis points. Well, we're already at 250, looking at getting up to 3. New Zealand just hit 3%, and the EU is like, oh, well, mate, we're a little bit late. Well, we'll see what happens there, inflation number. If it's higher than 8.9, you may see a bigger rate increase from the ECB going forward. So that's a big one if you're trading the euro. You also have a rate statement of intent for New Zealand, PPI numbers for Europe and Germany, and retail sales coming out for the British pound. Lastly, earnings for tomorrow, Applied Materials, Kohl's, Ross Stores, Estee Lauder, man, some big in the retail space names. Of course, you saw how bad the retail sales numbers were today, so that may not be so rosy for some of those retailers there. All right, everybody, that's going to do it for me. I'm out of here under an hour. Thank you very much. For those of you that enjoyed today's show, you can give me a like. Delia, thanks for joining us. You were very active out there today. I appreciate the comments. It's weird. We lost Les. I lost Big Eb. My regulars are disappearing, but I guess we get some new people coming up and joining us. So thanks for joining the show. For anybody who's new, hit that subscribe button so you're alerted when I do these shows live, which is every day, Monday through Friday at 2 p.m. Pacific time, and you can put all your comments and questions down below the YouTube video. I'm happy to answer whatever shows up underneath that YouTube. I have 3 questions I didn't get to today, which I will answer on tomorrow's show, so I will see everybody here on our Thursday edition of the Trader Merlin Show. Take care, everybody. I'll see you tomorrow.